Good afternoon, everyone. Thank you so much for allowing us this opportunity to work with you while you were having lunch. We are very excited to be here today. My name is Danielle Swanepoel, and I'm the Executive Director of International Relations and Strategic Initiatives at George Mason University, Korea. Today we're going to do something quite different. So Jeannie from Casper has already mentioned this, that it is quite unusual to have cryptocurrencies and debate being something that comes together. What you're going to hear today are quite a few discussions that are a little bit unusual. For example, none of us are cryptocurrency experts, so that's the first thing to know. So you're going to get insights as to how the general person who does not have expert knowledge in cryptocurrencies understands how cryptocurrencies are being handled in the world. Most importantly for today's debate, cryptocurrencies are very unique, especially with the way that the global economies are moving. So I'm not going to mention anything specific, but I will say that as trade around the world is changing, we are going to see the trade currencies also changing. Uniquely as well is discussions about who is going to control cryptocurrencies. This is something that we'll be discussing today. And I think third, something to definitely think about is the trade-off in terms of environmental damage or energy that is being used by cryptocurrencies as well. So I'd like to quickly explain what this is going to look like. So the debate is going to start from Team Proposition. Proposition supports the motion, so they're going to argue why we should do this one particular thing. Opposition, the table over here, is going to argue why we should not do this thing. So you're going to hear 6 speeches in total, 3 from Proposition and 3 from Opposition. So what you're going to hear today are different perspectives of how cryptocurrencies are being managed in the world. And just so you know, the motion, so what we are going to be discussing today is this House believes that stablecoins must be nationalized. I'm going to repeat that. This House believes, so this is what we are arguing for, that stablecoins must be nationalized. Please enjoy your meal and enjoy the debate. Thank you.
Okay, ladies and gentlemen, we'll get the debate started. First of all, we'd like to introduce the judges that we have here. My name is Chris Lowe, and I will be chairing this debate. Alongside me, joining me, we have Professor Danielle Swanepoel and Professor Peter Kipp. Under the motion, this House believes that stablecoins must be nationalized. I call this House to order and invite the Prime Minister to start the debate. Here.
Hello, my name is Tae-Gyu Lee. I'm going to be Prime Minister for this round, and it's a great honor to be here. My speech will start in 3, 2, 1. The opposition would have you believe that the financial future belongs to the unregulated realm for private corporations. They want to leave the stability of our economy and the security of your savings to the same forces that brought us to the chaos of Luna and Terra. Our burden in this debate is simple: to prove how governments have more incentive and capacity to manage the currency of tomorrow. Our countermodel looks like a CBDC. Our model is simply a central bank digital currency. We argue that private stablecoins, even under regulation, are fundamentally flawed. The collapse of Luna and Terra was not a lesson in regulation. It was a devastating indictment of the very nature of private stablecoins. On the contrast, CBDC is a direct liability of central banks. It is the digital equivalent of cash. This direct backing provides an absolute guarantee of value, eliminating the risk of a digital bank run that private stablecoins will always face. Our argumentation is threefold: stability, efficiency, and accountability, which our second speaker will be elaborating on in her speech. First, on to our first substance about how nationalization ensures absolute financial stability. The premise here is that the core function of money is trust. Private stablecoins, by their very nature, cannot offer the same level of trust as a national currency because their value is tied to a private entity's reserve and management. The point here is that only a nationalized stablecoin as a central bank digital currency can provide absolute financial stability. A CBDC would be a direct liability of the central bank, just like physical cash. There is no intermediary to fail, no reserve account to be mismanaged, and no corporate entity whose solvency can be questioned. Every digital unit is backed directly by the government's power to tax and print money. This at least guarantees value, which does not happen on opposition's world. This removes the very foundation of the run risk that caused the Terra and Luna to collapse. The impact is simple. This creates a safer, more resilient financial system for all citizens. It protects consumers from catastrophic losses and prevents a private stablecoin failure from cascading into the traditional financial markets. This stability is a public good, not a product to be sold by private companies. The opposition cannot achieve this level of stability. Their model relies on regulation, which is a reactive measure. No amount of regulation can eliminate the risk that a private company driven by profit will make a risky decision or simply fail. Regulation manages risks. Nationalization eliminates all form of it. Moving on to our second substantive on how nationalization promotes efficiency and financial inclusion. The premise here is that the current financial system is slow, expensive, and excludes many people. Private stablecoins, while sometimes an improvement, are a fragmented solution that will serve the interests of their creators first. The point is that a nationalized stablecoin creates a single, unified, and efficient digital infrastructure that serves the public interest. The mechanism is also simple. A CBDC would be a single digital currency usable across the entire economy. It would operate 24/7 with near instant settlement. The government can design the system with public good in mind, allowing for very low to zero transaction fees, particularly for essential services and remittances. The impact then, the system would dramatically lower transaction costs for everyone, boost economic activity by speeding up payments, and empower the financially marginalized. It would be a key tool for social equity, providing a low barrier to entry on ramp to the digital economy. The private sector cannot and will not achieve this whatsoever. Their business model depends on charging fees, and they have no incentive to create a unified, low-cost system that would cannibalize their own profits. Instead, they will create walled gardens and fragmented ecosystems that benefit their shareholders, not the public. Only on propositions world, we can create, under nationalization, we can create safe barriers for the marginalized, we can promote efficiency and also accountability. So proud to propose.
Okay, the speaker spoke for 4 minutes and 55 seconds. I thank the Prime Minister for his speech. Now, opening up the case for side opposition, I invite Leader of Opposition. Thanks. Here.
Hi everyone, this is Evie, and I'm the Leader of Opposition, and I'm also the BD lead at Kaspa Ecosystem Foundation. Before we get to question the merits of nationalization, we have to ask a fundamental question. Has the current system of private issuers under government oversight failed so much that we must abandon it for nationalization? If we're saying stablecoins must be nationalized, then we're not merely saying that the problem exists, but these problems are so severe that we should pay the price of complete nationalization. Stablecoins are young. The world's first stablecoin, BitUSD, was launched 11 years ago in 2014. And every major financial innovation requires decades to mature. Banking took centuries, with the Bank of England operating without minimal oversight for over 200 years. Security needed in the 1929 crash to create proper oversight, and credit cards operated for decades before regulation. The proposition's demand for immediate nationalization to take over is fundamentally unreasonable and historically arrogant. We acknowledge that stablecoins are not without flaws or risks. However, this young industry deserves the runway that all successful innovation has required. And history shows that early failures in financial system become catalysts for stronger safeguards and improved functionality. But premature government takeover will crash the innovation potential that the proper regulation guidance could nurture. Besides, far from being a broken system in desperate need of a savior, the stablecoin market has demonstrated enough self-correction that proves the private issuers under regulation are working. Tether learned from BitUSD's failure, abandoning algorithm mechanism and crypto collateral for one-to-one asset backing. And after 2021, responding to regulatory pressure, Tether significantly increased its allocation to US Treasury bonds, enhancing asset quality. Circle actively embraces regulation, publishes regular audit reports to earn users' trust. Major issuers now undergo regular audits, maintain full reserves. They have the right incentives with the competition to do so, because with the regulatory frameworks like the US Genius Act and the EU MiCA Act taking effect, compliance is no longer optional, but an entrant ticket for any stablecoin issuers seeking for mass adoption. Every concern has a regulatory remedy within the current system. If you're worried about volatility, it may require stronger reserve requirements, not nationalization. Transparency issues needed mandatory audits, not governmental ownership. Systematic risks call for coordinated oversight, not monopolization. These targeted solutions preserve competition and innovation while ensuring proper safeguards. And this is the path which every major financial innovation has gone through in history. And disrupting it would be like nationalizing Google in 1994 because of information security. And imagine a world like that. I talked about how nationalization would have costs, but what exactly are these costs? Here, I want to briefly touch on how nationalization creates a monopolist market.
Before you go on.
Eliminating the benefits of competition that currently drive users' benefits innovation. In today's stablecoin industry, issuers actively compete by offering incentives to encourage adoption. Circle partnered with Coinbase to subsidize yields for USDC holders, and earlier this year, Tron launched USDT with foundation reserves, backing a 20% annual yield. While these incentives carry risks, they present tangible benefits to users. Under nationalization, such incentives would vanish. A state monopoly removes competitive pressure to attract and retain users. And without rivals offering better terms, government-issued stablecoin would have no incentive to provide yields or benefits. In short, users lose both choice and reward, and receiving only the baseline service what a monopoly chooses to offer. And competition drives not only financial returns for users, but also technological advancement. Private issuers innovate user experience, integration capacities, and operational efficiency to gain market share. We deeply respect the vital role of government in ensuring stability, security, and public welfare. However, monopolization as the consequence of nationalization will wipe out the incentives that drive the private issuers. We believe that stablecoins continuously innovate to serve as the backbone of on-chain liquidity and trading volume, and while functioning as the critical bridges between decentralized finance and the traditional finance. And as we know, the DeFi ecosystem demands constant adoption. New protocols launch weekly, yield strategies evolve daily, and the cross-chain integrations require immediate responses to market needs. A government monopoly simply cannot match this space of innovation, and thus we call for the market to do its magic. Thanks.
Okay, the speaker spoke for 4 minutes and 55 seconds. I thank the speaker for his speech. Now, continuing the case for side opposition, I invite the Deputy Prime Minister here.
Okay. Ladies and gentlemen, stablecoins are becoming critical infrastructure for payments and savings. The question in this debate is very simple. Should this system be controlled by corporations accountable only to shareholders or by a public system accountable to its citizens? And we've not really heard a clear-cut answer coming from leader of opposition. Having that said, a nationalized stablecoin run by the central bank is subject to law, regulation, and as well as democratic oversight. Its rules and governments are transparent and legally binding. By contrast, what the opposition side world is trying to promote is a private company that can change its policy overnight with no public input or accountability. So we are living into two different areas. Like this world is proposing a nationalized world where things are under control, and also with a preventative measures, many circumstances can be prevented. However, in the world of side opposition, they're just reacting based upon what has already happened, right? We don't want those to happen. So let's go to the rebuttal straight. First, what leader of opposition is trying to say that the regulation currently is enough, just like credit card or the banking system that has a lot of history. Well, that can be true partially. However, what we are arguing is that the regulation is not enough. Regulation can demand transparency, but cannot eliminate fully the structural risks. In 2023, USDC, a regulated, fully collateralized coin, still crashed to 88 cents when its reserves were trapped in Silicon Valley Bank. Remember this case, right? So regulations are reactive after when a problem occurs. It manages risk after the fact, but it cannot remove the fundamental fragility of a private company holding public trust. Second, they also talked about how innovation is less likely to happen. However, they also have to prove why free market is a perfect model for making more innovation. At the end, government has also an interest to make society to move forward, make further innovation. So as a big agent, with a big responsible agent, we want to facilitate innovation. And also their house is not really understanding this model, because under our system, when a centralized CSDC, there will be a system like banks too, because they will also lend money and sell financial products, but the money is going to be issued from the central bank. So innovation still happens under our model as well. So having that said, let's move on to my argument. My argumentation, I'm going to talk about accountability. And unlike decentralized cryptocurrencies, stablecoins are centrally issued and managed by corporations. They may follow regulations, but their first duty is to maximize profit, not to serve the public. When profit and public welfare collides, obviously companies will go for profits. We've seen this case already. Tether concealed the true state of its reserve for years and admitted the truth only under pressure and only after investigation. Regulation comes too late, after damaging was done. Nationalization prevents this by baking transparency and oversight into the system from the very start. Some may argue nationalization risks politicizing money. Yes, that risk exists, but it's all about comparatives at the end of the day. The alternative is worse on their side. Corporate control is not neutral. It is unaccountable and profit-driven. Government actions, even if politicized, at least is visible, at least it's contestable, at least it's subject to democratic checks. Finally, CBDC can be designed with legally mandated privacy protections, something private firms have little incentive to provide. Corporations seek to monetize data. A public system can enshrine privacy and fairness into law. So the truth is this: no system is perfect, but it's all about comparative. We think that inherently government monopoly at worst case scenario is more transparent than private companies' monopoly. Thank you so much for listening.
Okay, the speaker spoke for 4 minutes and 10 seconds. I thank the speaker for his speech. Now, continuing the case for side opposition, I invite the Deputy Leader of Opposition. Thanks. Here.
Okay. Thank you, Mr. and Madam Speaker. Now, before we proceed with my arguments, I'd like to rebut to some of the points made by the government, and I'd like to make this point very loud and clear. The government has gone to great lengths to explain the dangers of stablecoins. But the fact is, stablecoins are an unprecedented case. These are financial instruments unlike anything the system has ever seen. Now, their potential applications may be vast, but they have yet to fully establish their role within the broader financial system. So stablecoins, still in the early stages of development, need space to grow and mature. With that being said, the opposition is not going to claim to deliver a fail-proof system. We do not aim for a zero-risk policy. Given the inherent nature of financial investments, vulnerabilities are going to exist. And these vulnerabilities also exist in the traditional financial system as well. But I want to take the time to point out that the government, no matter how many stablecoins they nationalize, are not going to be exempt from these dangers as well. The truth is, learning to deal with these risks is exactly how the modern financial architecture came to be what it is today. The world witnessed stock market crashes before. Some of them even led to Great Depressions. Some of these depressions began with the US mortgage market. But the fact is, none of these economic sectors have been nationalized to this day. Sure, they have been refitted with safety measure, and this is how we learn from our mistakes. We do not nationalize every system that carries a potential risk. Instead, we fine-tune it with safeguards, allowing the market to grow and evolve as a service of purpose in society. So what we want to say here in today's debate is that the government has a burden of proof. The burden of proof to show that stablecoins has a significant danger larger than the traditional financial system that they're going to justify state ownership. And if the government does not prove that stablecoin has a significantly larger danger than the traditional financial system, which is working very well in that it protects the shareholders' interest and that stakeholders in the financial market are protected by the current system. Unless they prove that, the opposition firmly believes that regulatory oversight can be those safeguards that we have been developing for the traditional financial system. We recognize that there are limitations to stablecoins, and that's why we fully support leveraging different guardrails, including government regulations or fiat currency, cryptocurrency collateral, and whatnot. But allowing the government to hold a monopoly through nationalization is not the right approach and will not deliver the stability it is meant to provide. Now, the Leader of Opposition explained in depth the effectiveness of the private sector, and I will focus on how political interference can undermine the very stability that the government is seeking for. Now, a government's agency purpose is not to follow market dynamics, but to serve the people's interest. And in the end, a government-run stablecoin can always be used to advance political objectives rather than financial stability. Like back in 2016 when Ethereum was hacked, DAO responded by hard forking the entire coin, canceling out the hijacked funds. Similarly, authorities could use this in international disputes by alienating accounts, restricting cross-border transactions for trade tariffs, employing economic sanctions, and whatnot. So this is how political agendas lead to a fragmentation on a global scale. Let's say stablecoins based in the US were nationalized by the US government. Tether currently accounts for about 60 to 7% of the stablecoin market, and USDC coins following second. With the US dominating a 90% staggering market share, do you really think that the other governments are going to accept this? They're going to crack out the whips and bring out their own stablecoins. So this fragments the cooperation on an international scale, and this gives no choice but for other countries to issue their own stablecoins. When countries scramble to build their own blockchain ecosystem, it undermines the stability that the government is trying to deliver. There's also domestic turbulence to consider as well. Important decisions regarding stablecoin distribution could be driven by policy objectives or electoral cycles or state priorities. For example, a government might loosen reserve management to stimulate domestic economy or to support certain sectors. This could mean lowering collateral requirements to release more liquidity into the system, similar to how central banks sometimes reduce interest rates to encourage spending. Fees and interest could be adjusted to gain political favor during elections or even to secure bipartisan support, all of which would create instability in the market. And this is why decentralization is a key component in today's debate. To fully reap the benefits of free transactions, political interest must be cast aside. The DeFi system, in contrast, allow these parameters to be adjusted through decentralized governance, where coin holders vote in line with their economic incentives rather than political expediency. When the decision-making process is tied to political agendas, the stablecoin loses its neutrality and becomes a policy tool. This erodes market stability and may push users to private alternatives in the end. To win today's debate, the government bears the burden of how it will effectively manage these risks under a nationalization policy. Without a clear solution to these added dangers, the government will fall short to the counter-model that the opposition has proposed. Thank you.
Okay, the speaker spoke for 4 minutes and 55 seconds. Now, wrapping up the case for side government, I invite the third speaker, Governor Whip, to the podium. Here.
A lot of questions for opposition. When it comes to their case, it basically boils down to innovation, to technological advancement, and their only fiat is that only free market is the sole provider of such services. We've never heard a substantiation that proves why that a nationalized coin cannot serve such goals. From the get-go of our speech, as our Prime Minister has fantastically provided, the unique benefit of nationalization is on the question of what a currency is supposed to serve to the society. What is a currency, Mr. Speaker? A currency, in the end, is a unit with which we transact goods. And we see the current flow of digitalization of cryptocurrencies as an extension of that public role that currencies serve, which is the reason why you see two dichotomous discussions taking place in America and the European market, idolized by MICA and Genius Act by US. For comparison, because nothing was provided from opposition, MICA goes for a free market development under strong regulation from the government. Whereas CDBC, the model that we went for in Europe, is that we go on the get-go with the nationalized model and we develop long-term goals in fiscal policy that goes in tandem with the long-term interest of the bloc, which is EU. None of the substantiations thus far proves why innovation comes short in our case from the opposition, because here's a simple rebuttal. If it were to be an only short-term goal that they were looking for, let's say for a decade, sure, the free market only looks for a short-term goal, and they would probably segmentize, scope the market consumers that they want to feed off of or capitalize on, and they could probably achieve that goal for a decade. But a national currency goes far beyond that, and most fiscal policies for a nation extend to 50 years or 25 years minimum. If you think about that, if you leave it up to a dichotomous market where many multiple players are giving up the voice to compete for the top position, we don't think there is a stability and the role that the currencies ought to fulfill in their case, and that is the burden that the opposition needs to prove in the end of the debate. But I guess it's too late. So if I were to sum up the debate in today's chamber, I think the basic roles that they were trying to allocate in their model is that there's innovation, which I debunked you already, and number two, that there is going to be some sort of politicization and where currencies are going to be everywhere. Now, a simple rebuttal for that as well. If you think about it, if you see the onset of the development of these said stable coins, they started having stable coins. Why? After the cases of Terra, they realized there is no regulation to control when cryptocurrencies go rogue. And at the same time, after that, Tether became one of the biggest assets in the world, amassing up to $169 million in assets, and now they're in the position where they can strong-arm the transaction costs, like in the traditional banking sector that they provided, which, by the way, we had a significant issue in the credit card companies in 2002 in South Korea, where more than 2.7 million people went default in credit, and we have more than $6.32 trillion that we have to pay off with taxpayers' money. You say traditional bankings are regulated just fine. I don't think that's the case if you think back to the case of 2002. It was only after government regulation that credit cards started flying right. So that's your burden to prove, not us. If anything, credit card companies became a lot better after the intervention of the government. So what is the comparison here? Mr. Speaker, I say the comparison that we need to have in today's debate is who fulfills the role of a currency in a digitalized world. In the digitalized world where currency is going to function just as the same as a physical currency that we have like the US dollar, we say our proposition model is safer, not only more innovative, but it's also long-term seeking, which is the reason why we say we have all the benefits that they by inherent model cannot have, because their market is driven by free interest. And free interest, by therefore, even with regulations, cannot dictate or mandate a single institution to go for a long-term goal that they're not incentivized to go in for. So summing up in today's debate, when they go for a hegemon, like fragmentized currencies not making this market foreseeable, we rather say in the perspective of the EU, they would rather have another EU cryptocurrency that can fight against the US dollar, because that's exactly what's going on in Tether. Because US dollar is strong-arming the interest rates in the cryptocurrency world, that is the reason why we actually rather would have a celebration of different nations making stable coins so that they don't have issues like tremendous amount of inflation after COVID-19, because USD had all the power to liquidate their assets and ruin many, many macroeconomies in the world, even including the strongest economic nation like EU. More than proud to propose.
Okay, the speaker spoke for 5 minutes. I thank the speaker for his speech. Now, I invited the last speaker of this debate to conclude the case for side opposition. Opposition whip, thanks. Here.
Ladies and gentlemen, this debate is never about stability because it is desirable. Of course, everyone wants that, but the real question is whether stability requires destroying innovation, privacy, and trust by handling stablecoins entirely to the government. So I think the proposition sets a very high burden for themselves because they must prove that not just nationalization creates stability, but it just uniquely does so that those benefits outweigh permanent harms on efficiency, politicization, and also surveillance, right? And when you evaluate the round, I think the judge test is going to be very simple. First, I think we need to care about scale, how many people are going to be affected. Second, in terms of reversibility, which harms can actually be fixed. And third, in terms of vulnerability, who loses the most if things go wrong. I think on all three aspects, opposition is going to win. On the first clash regarding efficiency and innovation, they would like us to believe that nationalization guarantees efficiency and safety. But their case collapsed when you examine the incentives of the government. Government are slow and political, right? They move at the pace of legal reviews, budget negotiations, and election cycles. So private firms, by contrast, move at the pace of innovation. The reason we already have cross-chain transfers, instant settlement, and user-friendly apps, it's because private, stablecoins compete to serve users. What happens when you nationalize? When you eliminate competition with all and if you only with only real driver of innovation, instead of like multiple fast-moving engines, you are left with one slow monopoly. I don't think that's stability. That's basically stagnation, right? But when we do, but on the other side, we don't really need to imagine on what we're trying to say in the opposition side. The Terra Luna collapse triggered reforms in the United States and European Union. Like USDC, improved transparency, under regulatory pressure. Regulation is already adapting, right? Proving that you can have stability without killing innovation. So the weighing here is very simple. On scale, billions of users lose the benefits of innovation under monopoly compared to the episodic collapse under regulation on our side. On reversibility, collapse are painful but fixable on the opposition side. Just as banks recovered post-2008, right? Monopoly stagnates and that's going to be permanent, right? So the judge test here is very simple. If proposition gives you stability, that's very brittle and short-lived also. Opposition gives you stability that compounds through continuous innovation. On the second clash about, regarding the issue of, where is my second clash? Stability and trust. So what they said was that government guarantees will make, people trust stablecoins. But let's look more closely on their case because government don't act neutral when it comes to like all of these things. I think one more we're able to already discuss this. Their real incentives are very political. They can freeze accounts to punish dissents, weaponize transactions for sanctions, or mismanage reserves to, plug fiscal gaps. That's not trust. I think that's a politicized control. By contrast, in the opposition world, stability emerges through adaptive reforms and regulatory guardrails. Where crisis occurs, private firms correct quickly and regulations strengthen the rules. That creates a form of trust based on neutrality and diversity, not on politics. So for example, right? India's demonetization destroyed smaller traders in the name of stability. Even in China, the digital yuan gives authorities power to surveil and freeze. People in those countries turn instead to like dollar-backed private stables. So when you compare this on vulnerability, it is the poor in fragile economies who lose the most where, where their only inflation hedge is turned into like politicized government coin, while regulation preserves their lifetime. On time frame also, prop may give us the illusion of certainty today, but over time, politics corrodes that trust. Regulations wobbles at the first, but gets stronger each shock. So in terms of judge test, I think on neutrality, resilience and protection and the vulnerable, opposition clearly also wins this discussion. On the last discussion of privacy and accountability, and I think this is the part where we will actually win because I think they ignored the entire discussion of privacy. A nationalized stable gives the state, visibility and accountability in every transaction. It is surveillance as a scale that we've never seen before. That enables censorship, just like what Wonmo mentioned, control, or even moral hazard, where people take reckless risks because they know that the government will always bail them out. On our side, what we preserve is that stability without that kind of surveillance. Regulation enforces anti-money laundering already while protecting ordinary users also. So on scales, maybe billions would lose privacy under nationalization, but under regulation, harms are targeted and contained, right? Because on both sides, these harms and risks are going to happen anyway. But on vulnerability, descendants, like migrants and activists, are the first to be silenced when the government runs the entire financial system. So this is an exclusive opposition impact. Only R will protect both stability and freedom also, right? So lastly, I think I still have time. If you look at the assumption of the model of the government side, they think that they would be able to achieve fast, transactions and allow users to be able to trust them. I think none of those are true. Their model, CBDC, are years behind. People flee politicized currencies. If we do this, the black market would adapt, right? So when it comes to scale, reversibility, vulnerability, and time frame, I think opposition wins this debate. And that's why we're happy to oppose.
Okay, the speaker spoke for 5 minutes and 20 seconds. That concludes this show debate. I would like to invite the debaters to cross floors, shake hands, and the judges will take some time for the deliberation. Thank you.
All right. Did you enjoy that? Was that interesting to have a different perspective? I hope so. I do have a question. So I think 3 things happened in this debate that was quite interesting. Number 1 was whether or not there's going to be political influence. So I'd like to have a show of hands. Do you believe that if it was nationalized, that stablecoin would be used for political influence? What do you think? Hands up if you think so. Keep your hands down if you think it won't happen. Okay. So no one thinks that if it's nationalized, it's going to be used for political influence. Good. Okay, well then I think that's a good thing. The second thing then that was discussed was innovation. Do you agree that governments move slowly with innovation? Okay, so I'm seeing some people nodding their heads. So what is likely to happen, what they're arguing, is that if it is nationalized, you're going to have some governments who are going to kind of drag their feet when it comes to decision making about innovation. Do you think that a free market is more likely to actually have innovation versus a government? So free markets, innovation, yes? Okay, so that would be something that opposition is going to argue for, that innovation in terms of cryptocurrencies are more likely to happen if it is not nationalized. Okay. I guess what I want to ask all of you is, do you think it should be nationalized? Hands up. Are you convinced that it should be nationalized? Come on guys, commit. You can do this. Nationalized? Hands up. Not nationalized. Okay, well I think that you saying nationalized actually might not nationalized. Okay, who thinks it should not be nationalized? Hands up. Good, the audience has decided. So yes, to a large extent, cryptocurrencies have developed the way that they have because it has not been regulated to that extent in terms of being owned by governments. So to a large extent, when we have government ownership, a couple of things are likely to happen. Number 1, you are going to be politicizing the actual cryptocurrency. So it is the case that there will be more control of how that currency is used because it is nationalized. The second thing to also consider is how innovation is going to be impacted. Innovation of currencies have to be dynamic. And likely it is the case that governments, as far as I know, I'm South African, so for me, my government is immensely slow, and they do control absolutely everything. So likely we are not going to have those cryptocurrencies actually being innovated as fast as it should. Because what you want is you want to be driven by the free market. The free market as a driver means that cryptocurrency development and innovation is likely to occur a lot faster than if governments become comfortable with the cryptocurrencies that they currently have. So I think in terms of government, ownership, politicizing, we can agree that that's likely to happen. The second thing, that whether or not innovation is likely to occur under government side, a lot of you are saying that's not going to happen, that if we have a free market, it's more likely to happen. Okay, fantastic. So that's great. The final thing that I do want to talk about, and this is quite interesting, governments. Do you think that governments are more likely to control the use of cryptocurrency in terms of surveillance? Because this is an argument that's coming from opposition side. So you're more likely to have surveillance and a breach of privacy if governments are nationalizing the cryptocurrencies. Do you agree that that is likely to happen? Okay, so I'm seeing some nodding heads. And again, I think to a large extent, I'm sorry to say, but we do give up some of our privacy and our freedom to the governments. I think that's natural as a citizen to do so. But to what extent governments control the actual currencies and the economy, that's something that we have to really grapple with. Great. So while the judges are deliberating, I'd like to just take a moment to thank the organizers for allowing us to do this debate. I am so happy to have had the debaters who are here from the various different universities giving you their perspective as a layman, as somebody who's not an expert in cryptocurrencies, on how they see the idea of nationalization. So thank you very much for this, and as soon as the judges are ready, they will give you the results.
So before the judges announce the results, I'd like to take a few minutes to introduce myself. I'm Evie, and I work at the KEFwa Ecosystem Foundation. We're very happy to be the title sponsor of this whole event, Onchain Symposium, and we're very happy to co-host this debate tournament with Mason University. And I'd like to encourage you guys to take a moment to scan this QR code and make a prediction, make a guess who's going to win, and then you're going to receive, download our wallet, and you're going to receive some cash. And you're also welcome to go outside to our booth. We have snacks here, and you can just buy snacks with cash. So we're like we have the instant payment capacities, and we're the fastest POW on earth. So feel free to enjoy that firsthand in action. So if the judges are ready, should we go back in there, or? I don't know. Well, I mean, should debaters go back there? Up there?
Yeah, this should go. Yeah, 1 minute. No, we'll just announce that. You just turn around and look at them.
Okay, thank you to the debaters that gave a wonderful debate. And I'd like to thank the audience for listening very carefully to this debate. The judges reached a unanimous decision. So unanimous decision means all the judges voted for the same team. And it was a very great debate, but the judges gave the win to side opposition. Congratulations, thank you.
All right, thank you very much, and congratulations to the opposition team who has effectively argued that governments are going to regulate, and to a large extent there will be no innovation. And yeah, so this is fantastic. Thank you so much for team opposition. Congratulations. And thank you very much for joining us for the debate today. Thank you.